Hey investors, welcome all of you to Stoxpot, your go-to episode to unpack what's happening around various stocks, industries and economy. And before we begin, here is a quick disclaimer. This podcast is purely meant for information purpose. So be clear that any piece of information present in this episode is not an investment advice. I talk only about what businesses do, what influences their growth or decline, and how does the future of business or industry look. So having said this, without any further delay, let's get started with the passenger vehicle sales numbers. The total passenger vehicle sales in India grew by 3.5% year-on-year in January 2025. This represents the highest ever sales for the month of January. Looking ahead, the recent union budget announcement, including personal income tax changes and interest rate cut by RBI, are expected to boost consumer confidence and drive demand. Now let's have a quick look into the wholesale price inflation data. In January 2025, India's wholesale prices climbed by 2.31% year-on-year, slightly easing from the previous rise of 2.37%. However, manufacturing prices accelerated to a two-year high, mainly boosted by the faster rise in food products, wearing apparels, and leather and related products. Meanwhile, the prices of food, non-agricultural products, and minerals are moderated. Finally, fuel and power prices witnessed a slight deflation. Having said this, now let's look into the quarterly performance of GPT Healthcare Limited. This entity operates a chain of multi-specialty hospitals under the brand name ILS Hospitals in Eastern India. It currently has 561 beds across 4 hospitals. It provides comprehensive medical care, including robotic knee surgeries. In the third quarter of FY25, this company registered 5.82% revenue growth and 6.8% profit growth. The company says its existing 4 hospitals performed well during the quarter, resulting in improved financial and operational metrics. The average revenue per occupied bed was 36,700 rupees, which aligns with their policy of serving the middle to high income segments. Also, its payer mix is primarily cash and insurance. Looking ahead, the company aims to establish a chain of 150 to 200 bedded hospitals in underserved markets in Eastern India. They are also targeting to become a 1,000-bed hospital chain within the next 2 to 3 years. In their journey to accomplish their goal, the company has invested 55 crore using a rental-based model to set up a new hospital in Raipur with 152-bed capacity. This hospital, which will specialize in oncology and quaternary care, is expected to be commissioned in March or early April. And without any pause, the company has also signed an MOU for a new hospital in Jamshedpur with a capacity of 150 beds and an estimated cost of approximately 65 crore. Hence, the company is clearly focusing on expanding their presence in under-penetrated regions with quality healthcare alongside investing in advanced medical services and technology. Now let's move on to Marks & Pharma Limited, a pharmaceutical company that is involved in research, manufacturing and marketing of generic pharmaceutical formulations in global markets. In the third quarter, the company's revenue is up by 16.3% and profits are up by 26% year-on-year. The US market that showed improvement during the quarter significantly contributed to this growth with a 37% increase year-on-year. About profitability, the gross profits increased 22.4% year-on-year, driven by the softer raw material prices and an improved product mix. However, EBITDA margins faced some pressure due to investments in acquisitions and increased freight costs. Looking ahead, by having strong cash balance, strong product pipeline, and ongoing scaling of acquired new manufacturing plant in Goa are expected to drive future growth for the company. Now let's move on to the last one on the list, Indo Count Industries Limited, one of the largest global manufacturer of home textile bed linens focused on fashion, institutional and utility bedding and sheets. During the quarter, acquisitions along with new brand businesses contributed significantly to revenue growth. However, gross margins were impacted by the product mix and product promotions. This impact is expected to continue partially in the fourth quarter as well. Now coming to shipping cost, though it remained high in the quarter, they have started to rationalize in the fourth quarter. Now let's see how does the future of this business look. Company expects its greenfield project in North Carolina to strengthen its US foothold, particularly on the East Coast. Also, the company is on a track to launch its new brand in the first quarter of FY26. Hence, the company is expanding its branded and utility bedding business, expecting it to be a key driver for growth with the aim of doubling its revenue by 2028. And that's it for today's episode of Stoxpot. If you find this podcast insightful, make sure you follow and share a few words with your friends. So until I meet you in the next one, it's me, LEKSHMAN MJ, signing off.